On today's episode, we discuss assumable loans, how they work, and how this little known option can be a huge advantage for someone wanting to buy a home in today's market. My name is Mark. Welcome to the Gentleman Broker Mortgage Brief. What if you could go back in time? What if you went back and you were able to choose your mortgage rates from 2021 when rates were below 3%? Sounds impossible, but for some, it's actually possible. It's called an assumable loan. You may have heard of them, but weren't sure what it was or what it means. Well, you're in for a treat because I'm going to explain it to you. As we talk about rates, let me go ahead and catch you up on our current mortgage rates. The average 30-year fixed is hovering at 6.49% according to Freddie Mac. Hey friends, go ahead and hit that subscribe button for me. I'd really appreciate the support. I had someone ask me this week to educate them on assumable loans, and it was a great question. So, what is an assumable loan? Let's start with the basics. An assumable mortgage is exactly what it sounds like. Instead of getting a brand new mortgage, a buyer takes over or assumes the seller's existing mortgage. That means they don't get today's interest rates. They inherit the seller's interest rate. They also inherit the remaining loan balance, the remaining loan term, and they continue making the payments just as if they had originated that loan themselves. It's basically jumping in and taking over someone else's existing loan. Now, generally, banks don't really like assumptions. If interest rates have gone from 2.5% to 6.5%, the bank would much rather make a brand new loan. So why would they ever allow assumptions? Because some government-backed loans were designed with a different purpose. Programs like VA, FHA, and USDA were created to help Americans become homeowners. The government wanted these loans to remain flexible. If military families had to move or someone unexpectedly relocated, the loan could continue instead of forcing everyone into a brand new mortgage. That flexibility became one of the features built into those loan programs. Fast forward to today, and suddenly that feature has become incredibly valuable because mortgage rates are so much higher than they were just a few years ago. So what loans can be assumed? People hear assumable mortgage and they may assume every mortgage works that way. They don't. Generally speaking, VA loans, FHA loans, and USDA loans can be assumed as long as the lender approves the buyer. Most conventional loans, however, cannot. This is because those are private market loans. They are not bound by the rules put in place like the government-backed loans. So if someone is offering an assumable mortgage, there's a very good chance it's one of those government-backed loan programs. Now, a lot of times when you do hear about an assumable, you'll hear it as a VA assumable. So why does everybody talk specifically about VA assumptions? Because VA borrowers purchased a ton of homes during the 2020, 2021, and early 2022 when interest rates were sitting in the 2s and 3s. Today, those exact same homes might require a buyer to finance at 6 or 7%. That's a massive payment difference. So naturally, buyers started asking, can I just take over that loan instead? Sometimes, surprisingly, yes. There are mechanisms for you to be able to do just that. So let's go ahead and walk through one. Imagine a veteran bought a home for $500,000. They put zero down, used their VA benefits, locked in a 2.25% interest rate. Fast forward 4 years. The home is now worth $700,000, but they still owe around $455,000. If you assume their mortgage, you inherit that 2.25% rate. Sounds amazing. But keep in mind, you aren't buying a $455,000 home. You're buying a $700,000 home. The seller has about $245,000 of equity. That equity belongs to them. which means you have to buy it. People think that they're buying a house with a low interest rate. They're not. They're buying a house that happens to have a low interest rate mortgage attached to it. Those are two very different things. This leads us to the equity gap, the delta between the existing loan and the sell price. That money has to come from somewhere. Usually, it's going to be one of three places: cash, a second mortgage, or seller financing. Everything above that existing loan balance is still your responsibility. Most buyers don't have $250,000 sitting around, which is why assumptions, although fantastic, don't happen nearly as often as social media makes it seem. You'll get a second mortgage or creative financing at current mortgage rates. When you blend the two rates together with the two separate payments, you see what your true monthly payment along with your blended total rate. Your actual payment becomes the combination of those two loans. So don't just look at the 2.25%, look at your total monthly payment. Another misconception is you don't just sign a paper and inherit someone's mortgage. The loan servicer still has to approve you. You'll verify income, employment, assets, credit. We assess your debt to income ratio, just like applying for a mortgage today. It's generally less paperwork than originating a brand new loan, but you absolutely still have to qualify. Okay, now let's dig into the VA entitlement portion. This is probably the most misunderstood part. VA loans aren't just mortgages. They're tied to a veteran's VA entitlement. Think of entitlement like a benefit you've earned through military service. If another eligible veteran assumes your loan and substitutes their entitlement, the original veteran may be able to restore their VA benefit for future use. But if a civilian assumes your VA loan or another veteran doesn't substitute entitlement, the original veteran's entitlement can remain tied up in that property. That's a really important conversation for veterans to have before agreeing to an assumption, because it could affect the seller's ability to use their VA benefit again in the future. So yes, assumable loans are pretty sweet. But if they're so great, why aren't they used more? One is time. Many loan servicers have small departments dedicated to assumptions. The process can take several weeks and, in some cases, months. Two, the large equity gap we talked about. Third is that some veterans may not want to tie up their VA entitlement. The fourth is limited inventory. Not all homes have this low rate and have the ability to be assumable. And fifth is, even though a mortgage can be assumed, some sellers may prefer a cleaner, simpler offer. It's quicker and easier. So should you get out there and start looking for assumable loans? Absolutely. But you got to go into it with realistic expectations. If you have a good amount of cash, maybe you're selling another home, maybe you've received an inheritance, maybe you've built up some savings, assuming a loan could save you hundreds of thousands of dollars in interest over the life of the loan. But if you're a first-time buyer with 3% down, finding an assumable mortgage you can actually afford may be more difficult than it sounds. Look, assumable mortgages aren't magic. They are a great option and a fantastic tool. Sometimes they're the absolute best option available. Other times, a traditional mortgage may actually make more sense. When you look at how much cash you have and your required timeline to close, and combine that with perhaps some seller credits, a temporary rate buy down, or a different loan program and different incentives being offered, a new loan may end up being a better solution for you. But with a pile of cash and some time on your side, an assumable mortgage can absolutely be like a time machine, snagging you that sweet mortgage rate from the past. You can't go back to yesterday's market, but you can recognize today's opportunities. If you have any questions about assumable loans or want to get a solid grasp of what programs are available for you, you can reach out to me at thegentlemanbroker.com. With that, I will leave you with this quote by Peter Drucker. The best way to predict the future is to create it. This has been your mortgage brief for the week. For everyone watching, I hope today is the start of a productive week. I hope you are proud of the work you are doing. My name is Mark, and I am the Gentleman Broker.